Hello, everyone, and thank you for attending this evening's presentation on winning day and swing trading breakouts. My name is Tom, and tonight we have an amazing 1-2 punch with Harry Boxer from the TechTrader.com and Ken Calhoun of TradeMastery.com. There's a lot these guys want to cover with you tonight, so we're going to jump right into the presentation with Harry Boxer of the TechTrader.com. But before that, I'd like to share you a special that Harry would like to extend to everyone attending this evening's presentation. Anyone who has never tried the TechTrader.com before, where Harry publishes both day and swing trading analysis and alerts, you can try his service by going to the TechTrader.com, 7 days free, no credit card required. And with your free trial registration, you'll be able to order Harry's educational double DVD set. This normally prices for $59.95. It's yours free just for registering and trying the site. Those of you that have tried a service before and are interested in coming back, don't worry, you can get the free DVD set too. Just sign up and contact us, and we'll be more than happy to help you get registered for that free DVD. So without further ado, may I present Harry Boxer. Harry, thank you so much for being here.
My pleasure. Thanks for being here, everybody. Look, we don't have a lot of time, so I'm not going to do my normal presentation, which is usually between 1 and 4 hours. But I do want to tell you that what I look for in my day trades. So, what you need to know is I'm on the site an hour and a half before we open, and I'm looking through hundreds of charts and looking through pre-market information and reasons why stocks may be gapping and running. Because what we do is we trade opening price gaps, and we trade the trends that follow beyond those gaps after the initial 10 or 20 minutes shows us potentially the consolidation and or direction of the stock. What we're looking for is key bullish price action with relatively higher volume than normal, at least 5 to 10 times normal. Hopefully on a very significant price and volume surge through a key technical resistance level, or in the case of shorting, through a key support level. What we're looking for is bullish and bearish following up consolidation patterns, such as pennants, wedges, flags, coils, things of that nature, that are price recognition patterns that over the years I've learned are continuation patterns for initial opening thrust. The patterns usually are precursors or setups for the next move or the extension of the prior early price move, be it the gap or the following move after the gap. But we're looking for the next wave up. The majority of stocks that we trade, you'll see lots of charts today. I'm going to, as opposed to going through my old presentation, I'm going to go through some charts and show you that these patterns repeat every day over and over and over. And yet, when I show this to a lot of people, they're dumbfounded. They first of all, it looks, when you look at these 1 minute chart, they almost look like daily charts. They look like charts that have trended over 6 months. We're talking over 6 hours, 10 hours, whatever. So what we're looking for is the ideas. In the morning, I create what's called a focus list. I publish it. I show everyone the stocks that I'm focusing on. Usually 12 to 15 stocks, maybe as much as 18. But for the most part, I'm going to go over these charts pre-market. I'm going to show you the patterns in what we call my pre-market talk. About 20 minutes to 9 Eastern. I'm on for about 40 minutes just before the market opens. I go over all these charts. I go over the reasons why they're gapping. I show you the price patterns, the support, the resistance, the target potentially, and then I'll either issue a trade alert or I'll put them on a watch list. The trade alert includes, as I said, the targets and stops, because we never issue a trade without a target and stops, and you cannot trade in my room if you don't have a stop. It just, you're asking for problems if you don't do that. So we're looking for the percent gain leaders pre-market. And we're looking for the volume price leaders as well. And you can get that anywhere. Lots of services give you that. Again, it's important to check prior support and resistance at prior highs and lows to get an idea where overhead resistance might be. I also want to emphasize that I use, personally, 10, 21, and 50 period moving averages. The 3 moving averages in my charts are different colors so you can see them. But I'm also looking for that after that initial thrust for the volume during the formation of the consolidation patterns early on should be dwindling to a low volume ebb to be ideal, meaning you're going to get a balance between buyers and sellers and it gets awfully quiet at the apex of a wedge or something of that nature. So I'm going to show you some ideas, but I'm not going to focus on the charts that are here. I want to emphasize to you that no matter what you do, you have to develop a disciplined, organized, focused approach. Part of why people subscribe to my service is because I do that for them. I monitor the early price volume action. I am on all day, hourly, with webinars, reviewing and updating what the charts are doing during the course of the day and how the price may be progressing. I'm changing my lines. I'm drawing new patterns in and new consolidation patterns and support and resistance lines and things of that nature. It's always important to monitor the early price volume action. Now, there's something called volume buzz. When you go to Warden Brothers, that's one of the services I use. Warden Brothers will give you an idea. For example, here's your volume buzz. If you click on the buzz itself, it'll rank them in order of the most volume buzz. Today, for example, PCRP, which you can see opened with a big thrust and gap and did nothing the rest of the day. And the vast majority of the volume buzz of 4,467% more volume than average for that day traded during the course of the session, all of it right there. Now, often that kind of an early thrust will create some kind of pattern and it'll move higher. I can show you one example. Here's an example, EYES that thrusted and ran up all day in a beautiful rising channel. We traded this today after it broke out of the early flag from about the $2 range up to 280. But what we're looking for is for that volume buzz indicator, which is the most amazing indicator I think there is. There's nobody out there that has it. It's proprietary to Warden Brothers. And what it does, it measures, obviously computers can do anything these days, but it will measure in the first 5-10 minutes, the first opening salvo, so to speak, what that volume is for the first 10 minutes compared to what the average volume is for the first 10 minutes over the last 100 days. And it'll normalize it and show you how that ranks versus all the other days of the last 100 days. And if you're getting 8, 10, 20, 30 times more volume in the first 10 or 15 minutes, it may indicate that money flow that could be something that ends up being a strong day trade. So in the case of, and this is what it is if you take a look at it, at any given point in the day, it looks back over the previous 100 days and then it gives you an idea of what the percent value was over. And that's why I follow volume buzz as an indicator. My favorite day trade patterns are intraday rising parallel channels with high relative volume. You would be amazed how often, and I'll show you dozens of examples today, stocks will start off with a pop and run up in a parallel angle from left corner to right corner in a 45-degree angle. As long as that channel isn't broken, you can stay with it pretty much all day. To me, it's the best day trade pattern there is. So I'm going to go now and show you some stuff from today, for example. Stocks that had big sessions that we bought off of today's patterns. This is yesterday, excuse me. So, Advanced Micro Devices had a big explosive move. You can see the big gap in there. It ran up sharply and pulled back, and at that point, right in there, I formed a little flag, and it broke out. At about 1270, we bought the stock, and my targets were I believe it was 13 and a quarter. We got up to about 13 and a quarter right there, backed off. My secondary target was 13 and 3/4, and that was right up here. We got very, very close to it, like 1369, and backed off into a coil. At the end of the day, it popped to 1370. But you can see this stock in no time, in no point of the day, other than maybe there, did this stock break a support level. But after it came down and went sideways and coiled, it never broke that low either. Another example for yesterday was a couple of the gold stocks. The GDXJ for gold popped, coiled. Very quietly here near the apex of that coil, it popped out. We bought it there at about 40. Within the next 4 hours, 42 and a quarter. At no point did this dip down and take out any support levels. It formed a rising flag, a mini pennant, and another one there before finishing at the high for the day, going away. In particular, we had another good day with JNUG. A lot of you know that one. Same kind of pattern, pop and coil, break out of the coil there. Now we look for that price volume surge, and then we look for the following consolidation following that. And if it doesn't break down too much and then moves sideways and gets awfully quiet, right in that, but just before the volume came in there, it got extremely quiet, a little tiny bar there, and then pop, and that's where we bought it at 1065. Most of us sold it at the end of the day in the 12 and a quarter or half range, or 12 and a quarter, 12.30. Fantastic move. You can see follow the rising channel, then accelerated in the last couple hours. That's what you want to see, ideally, on a day trade. One last one we bought, this was yesterday, was GLBS. Now, what's interesting about this one, this was not a morning trade. You can see it went nowhere all day. But suddenly, around 2:15, it exploded. When this pop came, some of us jumped on it. I didn't give a buy on it. What I was watching for was this flag in there, that coil that developed. How quiet it got right in there at the apex. See these little tiny bars? Usually at the apex of a pattern, the trading bars, this is a 1 minute bar. Here it barely traded at all. This is a very tiny bar, a few of them. And then this big pop came in. When it crossed 870, 875, a bunch of us did a trade quickly to 930, and some of us held it into the close at 970. So that was a very late scalp trade for almost a point. It doesn't really have to come at the beginning of the day if you watch stocks break out during the course of the day. And also, I always look for stocks that move in 5 waves. Here's a 1, 2, 3, 4, 5 waves. Almost Elliott wave basics are that stocks will move in 5 waves, 3 up and 2 down. 1 up and either down or sideways, and another 1 up and sideways. Now, I'm going to show you some other examples of stock from today. We showed you EYES. Again, this is a beautiful run-up, but very little chance to get into it. Maybe early on, if it popped there, and in this little pattern there, formed a flag for about 10 minutes, broke out right there. Some of us bought it there, but I didn't give the buy signal until it broke out there. Why? Because in my site, I don't talk about stocks under $2 until they break out over 2 with volume. That happened right there. And look at that move. ESPR. In the morning, it popped and pulled back, and then it broke out, formed a beautiful bull coil or bull pennant. If you go look closely, you'll see this one bar in here. That bar broke out of the pennant, and when the stock went above 1840, I put a buy on it. It went up to about 1880. It pulled back for an hour and coiled, broke out again, spiked up here. I gave a sell to some of it. I had a target of 20 and 20 and 3/4. It hit 20 here, 20 and 3/4 there. All of us got out. I implored everyone to sell the stock because it had such a beautiful big run, and it only took 3 hours. At the end of the day, it pulled down, it ran up, it formed a wedge, but pretty much didn't go much anywhere else. Maybe a good setup for tomorrow. CXRX, a huge move up and a quick pullback, bounce around, and form a very tight coil here. Now, I didn't do anything with it. It's actually a wedge, excuse me. Here's the wedge. When it broke out of the wedge, volume picked up, and then it pulled back in a nice, orderly falling wedge. I like those. When it broke out of the wedge here, at about 324, 323, I gave a buy on it. And an hour later, it got to 342, pulled back and consolidated for an hour. And you got to be patient sometimes. They take time to develop. And literally went up to 3.5, 353 by the close. A lot of us. Look, there's no reason to sell a stock. When you're in a good shape with a stock that's rising up and it doesn't break support, it doesn't break that trend line, just stay with it until the end of the day and sell it. CDW, a perfect example of a stock that had a breakaway gap, explosive move, pullback, popped and wedged. When it broke out of the wedge there, I gave a buy on it. It then pulled back to the apex, which I see a lot. The apex of a wedge is often retested. That happened right there. Okay, and then it ran up to my first target, which was 56. It then formed a coil, and I told people that if you're still in this, stick with it because it looks like it's a continuation pattern. I got a low volume ebb right there near the apex. Very low bar. See these 3 little bars in there? Really quiet little bars. Then pop. And then it ran up to my second target. And at the end of the day, the 5th wave up. 1, 2, 3, 4, 5 waves. In my way of thinking, this is wave 1. With a 1, 2, 3, 4, 5, wave 1, wave 2, wave 3, wave 4. This is the 5th wave. We sold the 5th wave around 57. And even then it formed the flag. A beautiful daily chart. Century Aluminum popped early, formed a falling wedge, got very quiet, and when the volume came in right there, we bought it at around 1565. Within 2 hours, it was 1665 or 1655. Anyway, whatever it was up 80, 90 cents, a nice little day trade. Weibo, This is not only a swing trade of mine, it's a day trade. Look at the last 2 sessions. 2 days in a row, same kind of pattern. Popped, wedged, broke out, we bought it with volume. It ran up sharply, and then it reached my target midday. And you know, I have a rule, folks, I like to point out to everybody. If you have a 5-wave move, 1, 2, 3, 4, 5, and it gets there by lunch hour, sell the stock. Why? Because the majority of traders that I know, institutional traders, traders that trade house accounts, they're all paid by a percent of profits that they make for the firm. So by midday, if they're going to go to lunch, you're not going to leave this on the table. They're going to take it off the table. And a lot of times you'd be surprised how a stock will go 5 ways by lunch hour and go nowhere the rest of the day. To be continued. The next day, popped, wedge, and and that was a beautiful trade 2 days in a row for Weibo. It's currently a swing trade of mine. Why? Let me show you something, folks. You're going to love this. This is your massive left shoulder, head, right shoulder. When it broke out in April, I put a swing trade on at 21.5. And by September, the stock was trading in the 50s, 150% gain. Well, after that kind of a move, it's going to take some time to consolidate, which it did. Well, guess what? It just broke out again. I put a swing on it yesterday. Finisar had a good day. Breakaway gap, pulled back. When it broke out there, I put a day trade on it. We got about 70 cents on it. Didn't do much, but it's also a swing trade because it broke out of a little mini inverse head and shoulders, stuck its head out above the 50-day moving average. And if we get a follow through, this could be a great, excellent trade. As you can see, it held the trend line. And my next target for a swing would be upwards of first 36 and then 45. This was a day trade for us today. And it's also a swing. I want you to know that my favorite pattern is a big breakaway surge. The first pullback, if it's orderly and comes on low volume, I'll often buy it on a pullback. In this case, it actually formed a wedge as well. Ran up and leg 1, 2, 3, 4. 5th wave's underway. I'm looking for 21, 22 on this stock. I think we'll get it. We've been in since 13. EXEL has been 3 times this year a swing trade for us. One there, and one there. And we're still in it. I'm looking for high 20s to low 30s on the stock. On a day trade basis, it popped up, pulled back. We bought it on the breakout. It worked its way nicely higher in a 5-wave advance by about 2 o'clock, and then it got hit. How about Netflix for a day trade today? It exploded and pulled back, formed a nice little, what I call bull coil. There's your breakout. We went long at about 141.60 with a target of 144 and a quarter, a half. Look at the high, 144.26, and close at 144 even. But that was a good day trade, even for 3 points, $100 stock. See, I'd rather trade a stock $10, $20, $30, $40 a share than trade for $140, $50, or $200 a share because I believe in leverage. I'd like to buy 5 and 10,000 shares of something versus 500. You can get in and out easier. So going back, I want to show you many, many examples of the patterns that I trade. There's a stock that gapped up, ran up, pulled back, got very quiet, a low volume ebb, and then broke out on volume right there. This is where we bought the stock around 25.90. Within 4 hours, it was 28.70, almost 3 points. But look how it held this channel up in a 45-degree angle. It's amazing how many stocks will do that. Another one, AIRG, a little unusual. It didn't exactly break out at the opening. It popped and pulled back. Then when it went through here, this line across here around 22.70 and ran up and formed the coil, that's when I put a buy on it at 24.10, 24.15. Now it ran up a bit, coiled, broke out again, flagged, and then broke out again. So net, it went from about 23.75 to 27.5, a damn good day trade. And again, look at the 45-degree angle rising channel. It is amazing how often a stock will run up in a parallel channel, and as long as it adheres to that channel, and if you read, by the way, folks, I wrote a book called Profitable Day in Swing Trading. It's on Amazon and Barnes & Noble. If you pick up a copy of the book, you'll read all of my day trading techniques. I think it's very elucidating. And you'll understand that when you're in my site, how I trade and why I trade certain stocks. Look at this beauty. Talk about a parallel channel, 45-degree angle. Breakaway gap, ran up and pulled back, then formed the coil. I got very quiet near the apex on low bars. See that volume pop right there? There's your breakout. We went long at about 838. It went up to 974 by the end of the day. It's $1.40 on an $8 stock, 18, 20%, whatever it is. But it never broke support all day. It just kept rising in that parallel channel, and it's a beauty. When you get a stock like that, it's a day trader's dream. There's nothing to do but go cha-ching, cha-ching, cha-ching every half hour. So that's exactly what it is. I have people in my room that actually buy 2 or 3 of my ideas. They put their stops and targets in, and they leave for the day to play golf or whatever. And when they come back, they see how much they made or lost. 82% of the time they made money, and they're very happy. And the reason they do that, some people, like myself, are emotional people or hyper people that are going to be unable to be disciplined enough to stay in the stock. So if they're not there, they know they have their stops and targets in, they'll either get out at a certain target or they're stopped out. And that's the discipline you need to have when you're trading regular stocks, regularly every day. A few more ideas just to show you. Beta. Now this one popped sharply and pulled back and formed a wedge, or a little bit of a falling wedge. And take a look at this high and here. This is where the volume came in. That's where we went into it at about 1240. By the end of the day, it was 1440 for a nice $2 day trade. But look at the parallel channel again. Never breaking the rising channel or the rising tops. A nice orderly advance. Some more ideas include Brooks. Now check this out. A big breakaway run. In other words, a gap and a run, and then the flag. I didn't do anything with this. See, the thing about, until I saw the breakout there at about 19. But 5 hours later, it's 21. The point is, we're trying to milk the stock. I don't need to get the low or the high. I need to get a big chunk in the middle. But when a stock goes up and flags and goes up and forms a pennant or a coil and does it again and then flags again, and see these consolidations are so bullish. What I usually tell people, after a long run and you start to accelerate, sell the stock because it's usually going to get profit taking, just like this did. Celdex. Interesting little pop, wedge, breakout, flag, run up, pull back. Now, the reason why I have these lines in here, this pattern is called an Andrews pitchfork. I could have put a line across here. But you have upper channel and lower channel. And sometimes the stock will stay in the larger channel but move along the upper end of it. And when it breaks down, if it bounces, it could do this for the rest of the day. In this case, we were stopped out there only because I decided to stop it after it broke the channel. But, our entry was about 19 and our exit was about 21.5. 2.5 point, nice little day trade. Again, notice the parallel rising angle. Just another example. Here's a stock that did not gap up, but popped and wedged. Broke out there. Ran up a bit and then coiled for 3 hours. This one drove you nuts, but it didn't break down. There's the breakout again, and there's the bull flag. Notice the acceleration. Great little pattern. Popped early, very, very tight, right at the apex of this coil. Popped out, pennant, popped out, rising coil, broke out, formed another one, and it accelerated right around just after lunch hour. Basically going from 6.5 to 7.25, 720. It's a nice little 70-cent, 12, 13% pop. But notice the parallel rising channel. It's amazing how many stocks do that. Check this one out. An early run up and a tight little pennant. on very low volume, and then the volume comes in, the stock accelerates. So we went in there around 22.5. It runs up to 27. You would think it would have been done by then, right? Doesn't break down, accelerates to 31, and by 2 o'clock it's at 35. Yeah, this was a hell of a run that day, folks. I got to tell you. 22.5 to 35. You don't see that too often, but when you get them, they're sweet. Again, 45-degree angle, rising channel. And a couple more to show you. And then we're going to have to take some questions. We don't have a lot of time right now. I just want you guys to get a flair for the kind of work we do on our site. I look for big gaps. Here's an explosive price volume surge, a nice early little bull wedge formation, a steady run up all day, support held here, and the parallel trend line held. At the end of the day, you had a chance to sell on the spike at 18 from our entry at 13 3/4. A really nice trade. So, you know, what I want to do is invite everybody to come join us in our trading room. There's several hundred traders with us, some very, very brilliant traders, some people that are extremely warm, very willing to teach other people and mentor other people. That's the beauty of my room. The people in there are a tight group of people. They like each other, and we have a lot of fun and make a lot of money. And so I invite everybody to come in for free, spend a week with me. And if you're not interested in joining us, I'd be shocked. That's pretty much my presentation for today. I have a couple of minutes to take a couple of questions, Tom, if you want to give me a couple.
Sure, if we can get give you guys a chance to get a question or two in there. You know, just Harry, you covered this a little bit. A lot of the patterns you showed today were on the day trading nature, but just as a reminder for everybody, your service does focus on both day and swing trade alerts, right?
Absolutely, and I can give you some examples of some of our swing trades, but we are just absolutely having a phenomenal time this year with our swings. Let me show you a couple of them. I guess that's a good way to end. We have a watch list for swing traders, and over the course of the here's one that we put out as a swing. See, and by the way, what I like to do is I'll take a stock that explodes, and when it pulls back, usually to the moving average, we had a beautiful swing trade here from 32 to about 43, 10 points, and it took about a week. I like to trade stocks that I think are accelerating. And I also have a whole list of shorts. Take a look at some of these stocks. They'll blow you away. These are box of shorts that I've been in since up here when it was over 110. It's now at 54. Under Armour, you can see how ugly that's been looking. We were short since it was about 33. It's 20. GII was short from here, around 45. It's down to 24. So you can see that when they work short, they really work well. I actually shorted this one, PVH, up here in the high 90s. It dropped down to 65. We covered it, and now we're short again. So I mean, that's the short swings. I have quite a few long swings. My swing of the year, NVIDIA. Put it on right there at 39. It's 119 and still going. And CWEI was the other that I put in right there when it broke out in the 23 range. It went up to 145 was acquired just this last month. So yeah, we have phenomenal swing trades in our room. And what I do basically, a lot of times my swing trades comes from my day trade ideas because the stock is usually thrusting. And that day may be the day that it begins a major move. But I'll just keep monitoring them, and a lot of times we'll have very successful. Just a couple others, EXEL, first a swing there, and we're long again. I think I mentioned that earlier. And there's been quite a few phenomenal winners for us this year. So again, just I want to invite everybody to come join me, even if you do nothing in the room in terms of posting or contributing. Just watch for a week. Spend some time in there. See what we do. Watch me while I'm in my webinars and the pics that we have and the comments from the people in the room. I think you'll be very impressed. I have people sending me emails every day saying, I can't believe I didn't see you. I wasn't in your site 10 years ago. I would have saved themselves a lot of money. And that's just the way it is at this point. let's turn it over to Ken, and appreciate everybody being here.
And just one last final note, just remind everyone, if you've never tried the techtrader.com before, you can take a 7-day free trial, no credit card required, right from the homepage, thetechtrader.com. I'm going to put a link in the chat box for everyone there. And along with your free trial registration, you can order a free copy of Harry's educational double DVD set. So it's normally $60, normally $59.95. It's yours just for the shipping and handling. So again, Harry, thank you so much for being here and for sharing some of your expertise with us. And as I said, we have an amazing 1-2 punch tonight, so we're not done. We have Ken Calhoun up next. And Ken, are you ready for me to pass the mic on over to you?
Absolutely. That was a rock star presentation, Harry. I'm clapping out loud here, man. You're the only other guy out there in the whole freaking industry who has great breakout charts. For whatever reason, and it eludes me, I don't know why it is, but you've got the best breakout charts out there. It seems like no one else knows this. We got to figure out the best charts to trade, and it makes life so much easier as a trader when you got charts like the ones you mentioned and the ones I mentioned. And great to see your presentation, Harry. So thanks. You're the other great breakout trader, the best guy out there. So I highly recommend Harry Boxer to everybody who wants to trade breakouts too. You got rockstar charts, man. So and great training. So I learn a lot every time I watch your presentation. So thanks.
Thanks, Ken.
One of the best in the world. So I only work with the best. It makes life a lot easier that way. I insist on working with the best people in the world. Seek out their expertise. Harry Boxer, highly recommend. He's top of the list for breakout trades and great guy to learn from. So nothing but great things. Harry's quick story at the New York Expo. Harry's book sold out. He brought a bunch of them. And they sold out in like 15 minutes flat. So that was impressive. So anyway, I'll go ahead and get started. You got big shoes to follow on with here. Let's see, Tom, did you want to introduce me?
I would absolutely love to introduce you, Ken, although I don't think you need much introduction to this crowd. But everyone, can we just make sure that you can see the winning day in swing trading breakout screen? Just give me a quick yes. I want to make sure it came through for everybody. And thank you very much for giving me those yeses. And as I said, not many on here I need an introduction to Ken Calhoun, but for those of you not familiar with his career, Ken is the president of TradeMastery.com, and having online trading with active traders in over 32 countries since 1999. Ken, I see you're also a UCLA alum. Go Bruins!
Go Bruins. Yeah.
Absolutely. And he's internationally published as a trader with great acclaim. So, Ken, thank you so much for being here. And for those of you that are not familiar with the website, I'm going to put a link to trademastery.com in there for everybody right now.
All right. Well, thanks so much. Let's get underway. Harry's such a great guy to learn from. He's one of my favorite traders in the whole world. He's a rock star. He really knows his stuff. So, absolutely, he's the kind of guy you should be learning from. And myself too, but pick the best. Hey, as always, all information is for educational use only. Not making an investment to buy, sell, or hold. If I had $1 for every time I said that, I'd have about $8,000. But anyway, as always, all information is for educational use only. You may have seen me all over the place. I have a monthly column in stocks and commodities called Trading on Momentum. So I do a lot of breakout chart training. I've been in Market Watch from back in the days of when the dinosaurs roamed the earth. Featured speaker at the Money Show Expos. And that's kind of it for my PowerPoints. Harry did a great job of looking at both day and swing trading charts. Just so you guys know, I like looking for same kind of charts. My favorite types of charts for intraday are going to be minor gap continuations. And this is a 2-day 1-minute candlestick chart. So whenever you see something like this, like ESPR, SCOR was a pivot call I called long for my traders at 21.6 this morning. We're out at just under the 23 whole number resistance. One of my traders, Barry, called that, so thanks, from Canada. Anyway, if you have a gap reversal, those are good if you have wide trading ranges. One of the things that sets best traders apart from everyone else, it's so hard for me to explain, Harry did a great job, and hopefully I'll do a great job too, is trade instruments with wide trading ranges, multiple points. It's a lot easier to put on a winning trade if you got something that, say, ran from 30 to 24, a 6-point drop, and did a quick, 3-point, half of that, 50% recovery. It's much easier to get a half point or a point out of a chart like that, or a minor gap continuation, or a breakout chart that actually has some strength to it, or a gap down to the downside that continues as well. But what I'm going to cover mostly today is swing trading charts, because Harry did such a great job on the intraday and swing charts. That was also one of my picks. JNUG was one of our live room calls too yesterday on its big run. That was an epic run up. We called the long right here, right over his 10.8 was my long call in JNUG. That did schwang, like Wayne's World. Party on, that's a good technical term, is schwang. Anyway, it ran up. Gotta have some fun here. 10.8 all the way up to 12.40, gang. That's a nice runner. I also called it today in my live room at 12.20. I had us get out at 12.60 on the pullback, right, because it was starting to pull back there. But I had a nice bullish cup breakout. But these types of charts with large ranges are really important to focus your energy on as a trader. Now for swing trades, if I got some swing trading charts for you, I look at not only the 15-day, 15-minute candlestick chart, but I also follow the daily chart. So if we're looking at daily candlestick charts, you can see the types of patterns that make the very best breakout continuations. Like that NVIDIA chart, if you look at the 1 year on that one, that was a nice big rock star chart going from 30 to 120. Well, for shorter term charts, one of the things that really helps is to use a 15-day 15-minute chart. And here's my current picks for my Swing Scans members. I'll give you guys a free inside look at, these are all the picks that my guys got and ladies got on Saturday. I run swingscans.com for swing traders and tradingtheopen.com for day traders. I only run like 70 sites. I'm a busy guy. Anyway, we got an inverse head and shoulders and a bullish cup breakout here. I like cup breakouts. One of the quick rider downers that you guys want to focus on is a tall candle or a tall bar at the right side on high volume. That's a nice classic thrust breakout above previous highs. So if you have a tall green candle at the right side of a bullish cup, that will usually dry up the supply enough to give you a nice 45-degree angle breakout. And like Harry said, the best chart patterns are going to be a nice tight channel. Looks like I always say the analogy is a piece of yarn or dental floss or string tied tight in a 45-degree angle channel breakout. Those make for good rockstar charts. So Saturday, I made the call for my traders to go along in this, and it's Acadia Pharma, and it's the running up. Our metals and pharmaceuticals have been on a tear lately as well. Here's another good example of one. ALLY. My single favorite chart pattern in the known universe is gap continuations. For candlestick traders, they're called windows. I still call them gaps. But I like the visual analogy of it's a window, and the window's open. And Benjamins are flying in the window. We're having fun. Money's coming in. Boom. Your best trade in your entire life as a trader is going to be wide point range instruments that have a gap that continues up to new highs. And often, as one of my articles in Stocks and Commodities magazine said, multiple day gap continuations are even stronger. This also illustrates another chart pattern, what I call an acceleration ramp. And that's where you got a steady uptrend, like a 20, 30-degree angle breakout, then matures into a more aggressive 45-degree angle trend. So you got a steady uptrend, your little gap gets the party started. It's alive, bzz, weird science, and it's off to the races. So minor gap continuations on high volume with nice, clean, well-mannered charts are the right way to trade. Another good example of one OLN. And again, these are all picks in my Swing Scans service from this past Saturday. These were my picks. Not too shabby, eh? How much money could you have potentially made had you traded this? Even if you got late to the party on the Saturday call or one of my earlier calls. Look at this. Now, what do you guys start to notice? Whenever I'm learning from experts, and I spend a fortune learning from the world's top experts, I've got colleagues like Brian Tracy and other world's top people, you start to look for things in common that the world's top people tell you. And what I get from Harry and what I get from myself is we look for charts that would be hard to lose money with, charts that have such wide volatile ranges. Just a clean, well-mannered price action breakout continuation plays. You could have thrown darts at this chart and come out smelling like roses, right? These are the right kind of charts to trade. It is so hard for traders to locate these on their own. So that's why I strongly encourage you guys to visit thetechtrader.com to check out Harry's services and visit trademastery.com to check out my services, because we do all the scanning work for you. But we're certainly, I know both of our services, we like to encourage participation. Some of my best picks are from my traders, like Barry's call and score today was a big score for us in the live room. I usually don't like pivots. I'm the breakout guy, the other breakout guy. But when I do play pivots, it's on extreme oversolds. Good traders always trade the outlier charts with wide ranges that are clean and well managed and easy to trade. So that's why I call 21-7 today for my guys in this. That was the only call I made today. It was 21.7 long. Pre-market, it was down here. I said if it ever gets over 21.7 in market, we hit it long, and that was a long play. Those are the types of charts you want to focus on, are outlier strong continuation charts that have good volatility. So ARNC is this ticker. And again, another acceleration ramp. Steady uptrend, got a nice gap up, and then a sharper angle breakout up here. Good charts are ones that mature like a hockey stick. Or kind of like a good game. Think about if you're Tom Brady playing for the Pats, up by 6. And that was my call on Saturday. I wish I'd bet it in Vegas. I told my traders I'd only lay 3-2 spread odds on a 6-point lead in the Pats. Boom. I thought I'd have egg on the face with the Atlanta up by 20 at the halftime. I'm like, oh crap, I'm going to have to explain to my guys. But I was right, 6 points anyway. You throw the pass. It doesn't get intercepted, and they run it into the end zone. They shoot, they score, the crowd goes wild, and we've got another touchdown play in the house. Anyway, I got really excited. A Super Bowl 51, the most exciting last quarter of a Super Bowl I've seen in my life. Anyway, first time in history when it went in overtime. But anyway, I digress. I get excited. I like jazz, I like Sinatra, I like classical music, I like honest people, I like great charts, and I like traders. And I like making lots of money. It's kind of in order. Actually, like making lots of money is probably my favorite thing. Anyway, looking at charts like this, I'm completely honest. I'm in it for the money. I like to trade where I can throw darts at things that are likely to produce money for me quickly. This is a 15-day, 15-minute candlestick chart. Leg Mason, that's okay. It got started. It's up out of the muck here. We got a nice bullish cut breakout above that 34. Nice minor gap. It's like, wake me if it gets up here, right? We'll see if it continues the madness. MXL, another one of my picks, not as good as the earlier chart, but it's still ran off from 24 to 26.50. Nice steady grinders. Seagate pulled up, did a gap up, pulled back to support, found support at the previous bear cup low here off the 42.5 and ran up to resistance. I'm a breakout guy, so I don't trade. It's probably a smart idea to adapt what you've learned from Harry too, is trade earlier pennants and wedge and coil breakouts. I tend to trade relatively conservatively. I would wait till 47.50 to go long Seagate. That's my play. I'm going to wait till 47.50 and then scale in. Okay. So I like to wait a little longer than I need to probably, but that's my, we all have different styles. That's what makes markets. Anyway, 27 to 32, a nice 5-point run. DVMT. So almost all my charts worked out good, and this is 100%. This is complete transparency. This is every single chart that my swingscans.com now enrolling at a website near you. The SwingScans members got DVMT. We do Saturday webinars, and I split my swing and day trading services up because I got a lot of each and many traders in both. But anyway, gaps that continue on wide range instruments, at least 10% price action on a 15-day chart is my minimum. So a $50 stock, better have 5 points of VIG, 5 points of juice or better, else I'm not going to hit it. All right, you want nice wide charts like the kind Harry taught you and the kind I teach you. You want these kind of charts because it makes it a lot easier to potentially make money because they actually have some volatility. So acceleration ramp, not in yet. We're coiling up here with almost an ascending triangle high, not quite. The stock market's doing an ascending triangle, right? The S&P. It's kind of noisy though. One of the tips you want to, but that's kind of an ascending triangle in the S&P if we take out the 2302. Look for those similar types of patterns in your charts for good trading setups. Symantec's been a baller chart, a rockstar chart lately too, right? Look at Symantec, 17 to 28. What a chart, what a show. He shoots, he scores, the crowd goes wild. Crowd wave, anyway. Gotta have fun with this stuff. How do you make money as a trader? Lose really small. Take lots of shots. One of the things that took me a long time to learn thousands of real money trades is good trades feel like you're a little bit late to get in and a little bit early to get out. It's not the other way around. So instead of over trading marginal charts, you want to carefully trade the strongest charts with relatively tight stops. And then you take a lot of shots, you know, because it's all a numbers game. Successful trading is a lot more about the math than the chart patterns. The chart patterns qualify it. They make, you know, it's like, I don't know, recruiting somebody for an executive position or something. You're looking at, do they have the right background experience and years of leadership and project management skills and successful budgeting experience and all that kind of stuff. That gets you in the door, but whether or not you actually trade it is a whole nother ball of wax. And what you have to do is scale in or add to your winning trades. How many of you, show of hands, man, actually I can't see, so just to yourselves out there, show of hands. I always ask my money show audiences this, and I encourage all educators to ask this too. How many of you guys add to winning trades? Like my colleague Van Tharp calls position sizing. You should 100% of the time, my biggest real money trades are those in which I've sequentially added every couple of points on a swing trade. So if I buy this guy at say 17 and a quarter, I'll buy it again up over 20, maybe again over 24. A couple hundred shares each leg of the run. So I'm not doing a 1,000 share trade right here and then taking a big stop. Instead, I'm kind of piecemealing or parceling into the trade and then playing a dozen or 15 different charts like these to scale in. So my question to you, my challenge to you is paper trade and learn, practice, at least at a minimum, practice adding to winning trades 100% of the time and subtracting from losing trades 100% of the time. You always add, you feed your winners, you starve your losers. That's one of my sayings that I taught my Wall Street guys, my institutional clients. You feed your winners, starve your losers as a trader. So if you got a nice cut breakout, ascending triangle, okay, that's nice. It's of interest. It's not too late to the party. Maybe it runs to 30. I don't know. I don't predict. I just react and try and make as much money as I can. I'm in it for the money. I expect to get paid. So the way to do that is to trade the best charts. Twitter's not great, but it ran 16 to 18, so a nice big run up today. This was one of my calls for a breakout on a bullish cut pattern for my guys in the live room today. One thing you want to start selling into and using as support and resistance if you're not already doing is use whole numbers as support and as resistance, because oftentimes you'll find, we just randomly go through some of these charts, you'll find the 50-cent increment and the whole number increment often provide support and resistance. And I mean, every trader should know that, but when was the last time you used it to make money? All right, so those are the kind of charts you want to focus on. GDX was one of my calls for my swing scans members. JNUG was for my day trading members, but another good 45-degree angle, like Harry said, right? Those the good traders, we know that you're looking for 45-degree angle, tight channel type, like a piece of, I say, like a piece of dental floss or yarn that's tied tight like a string in a 45-degree angle, especially if it's taking out previous highs, and especially if it's got nice multiple gaps, runaway, breakaway gaps. Those make for really good setup. So that's the type of chart to play. Okay, so for swing trades, those are the type, at least I like to trade myself, because the point range is there, the volatility is there, and more important than anything, the consistency is there. I've got a big problem with these young kids who are under 30 saying, day trade penny stocks or day trade cheap stocks. This would be a really stupid chart to trade, for example, PULM. I mean, maybe it's not completely stupid. If you happen to get lucky on a couple of the runs, you could have done well. But overall, these types of charts make for good theater, good storytelling, but they're really inconsistent. It's like people. Your best, like Harry said, as professional traders, we trade patterns. That's why they call us pattern day traders, hence the clever title. Patterns, right? We trade repeatable patterns. If you have pump and dump, spike and drop, cheap charts, they're very challenging to be on the right side of, because, in a retrospect, if I'm a big Doctor Who fan. If I could get in the TARDIS and go back in time, okay, fine. I'd go back here and load the boat and put all my money there, and I'd be a happy camper. But what's more likely to happen is, like you and I, we might buy here, and we get stopped out down here. Okay, and we say, okay, it's capitulating, we'll go short. Then we get stopped out here. Okay, then we go long up here, and then we get stopped out down there. And then we go long again, and we actually make a winning trade, and then we get really confident. So you go super long up here, and then you get back all your profit and your deep kimchi again, and you get stopped out, et cetera, et cetera. Those type of charts, epic fail. They're up and down, they're zigzag, they're very tough to get right. How much easier to trade something like this? PULM is like a girlfriend that fights with you and argues. And you just say next, right? Or don't let the doorknob hit you on the way out there, sweetheart. What you want to do is you want to trade things that are consistent and peaceful and honest, right? So my wife is great. She's from Japan. I still don't understand her after almost 20 years of marriage. That's the key to a great marriage. Marry someone from another country, you don't understand what the heck they're saying. It works great. Well, in trades, you want to trade charts, however, that you do understand what they're saying. and it's saying, show me the money. And you're trying to trade consistent charts with consistent trends that run consistently over time, that are so much easier. You know, you could throw darts at the thing and you'd be hard pressed to take a stop. Maybe you take a stop there or there. But overall, if you try a couple, 3 times at it, which brings me to another point, try a couple of times, but there's a point of diminishing return. You know, it's like dancing with somebody. And if you step on her feet and she cries, ouch, stop dancing with that one. Just a little trading humor there. You know, give a shot 2 or 3 times, 3 strikes and you're out, though. That's my 3 strikes rule as the trader. I'll take a shot at a stock 3 times. But if I get stopped out, you know, twice out of 3 times, I'm not making money in it. I'm going to move on to the other chart, or I'll be in other charts at the same time, so I will stop trading that. So don't dig yourself into that spiral, the trader's death spiral of small wins and bigger stops. It's smaller wins and big stops and small wins and big stops. And then you're trying to hide your trading losses from your wife. You know who you are. If you try and conceal your trading losses from a spouse, you might have a problem as a trader. All right? So stop the madness. There's got to be a better way. And speaking of sharks, what you're looking for, trades that aren't going to make shark food out of you. You want to trade things that actually have some consistency in them. And that's one thing I like so much about Harry Boxer is he picks rock star charts. He's got the best charts out there. And I'm no slouch either. You'll find that from the great traders. Well, we know the charts that have good profit potential. And those are the kind of charts you want to focus your energy on to live with as a trader. Kind of like people that are honest and relaxed and don't argue with you. You know, I mean, it's kind of like, you know, I used to, when I lived in Southern California, I used to go to nightclubs and meet all kinds of exciting women, and that was bought breakfast for more people than I can remember. But, you know, after a while, you get tired of the madness, and you get all the drama from the nightclub girls. And you don't want to trade charts that are like a nightclub girl that might be exciting, but it ends up bad because of the skeletons in the closet and the inconsistent behavior and all that kind of stuff. But I got 2 degrees of psychology, so I'm a people person. But more than that, I like to be a money person, and so you want to trade consistent charts and deal with consistent people that are honest and have past behavior as the best predictor of future behavior, just like people. Same thing in pattern swing and day trades. Your past behavior is likely the best indicator of future behavior. Single best chart pattern in the world is right there. You have my word on it. I've traded millions of dollars, real money trades in stocks and ETFs primarily, mainly in stocks, and the last 4, 5, 6 years in ETFs like the triples like UVXY and some of the GDX and the gold miners and all that. But mainly I'm a stock trader. I'm a stock guy. And what I found in all these years is wait until things break above previous day's highs. Never ever. Here's a good quick rule of thumb. Thou shalt not ever trade anything that's inside the previous day's range. Or that's, at least for my experience, I found those cause most stop losses. So if you have a chart, say like this, that doesn't end well, right? Charts that are inside the previous day's ranges are choppy and don't run. Charts that are outside of the previous day's ranges, once they break prior highs, tend to attract institutional volume and money flow. You can see that previous resistance was a basing wedge here on current day here in ESPR, and for that reason it took off to new highs and ran all the way from 18.5 to 20.5, and it's got kind of an inverse head and shoulders going on up here, and it's likely a good long candidate somewhere north of 20.8, but I'm not going to day trade it down here at 20.25, 2040. So the rule is mentally, visually, X out the previous day's high-low range and only focus your energy, whether you're day or swing trading, on instruments that are above the previous day's high. Now, for proof of concept, go back over your last 20 stop losses and see if that wasn't the case. The vast majority of your stops are probably choppy charts that aren't the kind that Harry and I like, and they're charts that initiated the trade inside the previous day's range. I look at it like the Earth's gravitational field, and up here, I'm a big fan of Star Wars and Star Trek and all that kind of stuff, or at least used to be. Anyway, it's still trapped by gravity. Also, more institutional ambivalence because OHLC triggers haven't hit on the algorithmic algo trades and dark pool and liquidity algorithms that they trade OHLC breakouts. So if, you know, so I worked with some of these guys, the professional institutional guys, and the algorithmic trades, you know, if and only if current price action in Boolean operators is greater than or equal or greater than previous day's high, then they'll start putting volume on. That's why you see these little volume spikes at 2-day high inflection points, right? And then you get a nice volume surge and we're off to the races. But down here, the volume is less than. So notice if you were to use that probably that, what is it, the Warden one or whatever. This is a declining open range volume today compared to yesterday. So that's a thou shalt not trade, because the volume, traders vote with volume, like I do. I vote with volume. And so when you have volume that's less than previous day's open range volume, I don't take the trade, even if it's in an uptrend. I safely wait until it breaks prior day's high. Especially, I'd prefer to see nice high volume. So like that, that's a nice high volume spike up here over the whole number at 19. Going to draw the lines here, connect the dots and look for patterns. I used to be a statistician for the Ford Motor Company, best corporate Fortune 500 I ever worked with back in Dearborn in Michigan. Cold as heck. It was minus 30 on my 30th birthday. I'm now ripe old age of 53. How the heck did that happen? Anyway, you see a nice big volume breakout at a whole number, right? That's not by coincidence. You'll often see whole numbers attract new volume. So as a smart day or swing trader, you need to learn the patterns cold and then be able to use them with charts to your advantage that can make you the most money potentially compared to anything else out there. So, when you look at Harry Boxer's charts from the techtrader.com and you look at my charts, Ken Calhoun from trademastery.com, you'll notice something in common. They're rock star charts. They're charts that would be very difficult to lose money with because they're so strong, and the volatility and the sustainability is there. And so many of the educators I've seen out there, they try and do all these voodoo magic indicators and chart spaghetti and magic green arrow, red arrow, buy a special proprietary black box indicator, hooey and nonsense BS, and they try and overcomplicate it. It just needs to be about price action and patterns and leveraging that to your knowledge and your capability to make a lot of money as a trader, and keep stops really tight just to be on the safe side, because you still got to figure out, by the way, my parting thought of the night is figure out how you can still make money even if you only write half the time or less. And the only way to do that, which is most institutional, my institutional guys, that's not a metric they care about. That's a secondary metric, is percentage of winning trades. The primary metric is how much money did you make. And the way that you make money as a trader is to add to winning trades. For day trades, you can usually only add once, or at most twice, but usually just once on a day trade. Swing trades, every couple, 3 days, you're good to go. I usually cap out around 3 or 4 times to add to swing trades, once for day trades, but always figure out how to add to winning trades so that you're leveraging up gradually over time. Whether you're trading these nice acceleration ramps with a nice 45-degree angle or a nice steadier uptrend, like any of these picks from my swing scans, these are the type of charts, and the ones that Harry mentioned, that you really want to focus your energy on as a trader. We have so much in common, which it's a real thrill for me to share the stage with Harry Boxer, because he's a pro. He's a total expert, and he's another great breakout trader, and he picks these outstanding charts, and hopefully I do too. And so, learn from guys like us and know the difference between choppy charts that don't go anywhere, that are just going to frustrate you, and charts that actually have a shot of running, because that's the money makers, the ones that actually run up like this and do reasonably well and have a well-defined technical trading style that's documented behind it to support it. And so much of what I do with my traders, so many hundreds of traders in my services, I like to provide Q&A support and the rest of it, and be responsible to thoughtfully, gently, intelligently answer questions that traders have as well. So with that, I am pretty much out of here. I never run overtime. I'm a big fan of starting and ending on time because I respect your all's time. What I would encourage you to do to learn more from me, as of today, I got 4,300. Boom, flawless victory. Number one in the whole trading industry. Nobody has 4,300 people registered for a webinar that I know of. I've been doing these for quite a few years now. That's why it's built up over time. Every single Saturday from 10 to 10:20, you can join me and hundreds of other traders absolutely free, just to get to know me. No hard sell. Just get familiar. Join the club. trademastery.com/free for my trading week ahead broadcast, where I go over key S&R levels for the S&P, lead sectors, and good rockstar breakout charts. So Harry, it's been great working with you, and I highly recommend you guys learn from Harry Boxer. He's one of the world's best out there to learn from. You have my word on that. I wouldn't work with him if he wasn't. I only work with the world's best people because life is short, time is short, and we all value our time and our energy highly. So learn from genuine experts like Harry Boxer and myself, Ken Calhoun, and it's been a real pleasure. You guys have been amazing. Thanks to all of you for being here, and look forward to seeing you guys in our upcoming events at both the techtrader.com and trademastery.com. Thanks so much, and Tom, I guess